Welcome to Closing Bell. Thank you, Brian. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with stocks on a 4-day sprint higher into Thanksgiving after a 3-week setback. Take a look at the key indexes with 60 minutes left to go. The S&P 500 surmounting the 6,800 level once again, rising more than 4% since last Friday's intraday low. And the Dow back to within 2% of its former peak. Take a look at the Nasdaq as well, up almost 1% on the day. We do have the small cap Russell 2000 outperforming once again as Wall Street locks into the rate cut playbook 2 weeks ahead of the next Fed decision. The AI trade is participating, though, with another round of rotation within it as Alphabet takes a breather following its blistering run. And we see Microsoft and Oracle, they have been recent laggards. They are now to the upside today, which takes us to our talk of the tape. With the S&P 500 threatening to go positive for the month after a 5% reset, has the all clear been sounded for a year-end ramp, or is it time for investors to protect their gains as a rewarding year draws to a close? Here to weigh in on all of it, FundStrat managing partner and CNBC contributor Tom Lee. Tom, great to see you.
Great to see you, Mike.
So you had been saying, let's say a few weeks ago that we could get some choppiness in the first part of November, but you were still kind of bullish looking beyond that. What, in your view, has the market been contending with in recent weeks? What did we learn, and how does it set us up for the outlook here?
Yeah, well, I think the market's been struggling with the same things that it's grappled with all year, which is a monetary policy direction that's not completely clear. As you know, the odds of a December cut have really jumped around from as high as 60 down to 30 back to 80. And the second is, of course, policy volatility, because the administration does make proclamations and statements that are sometimes head fakes but confuse investors, and it's all resulted in really suppressed enthusiasm for stocks. Sentiment has been bearish.
And then that, led to a 5+% pullback in the S&P 500. A lot of the more aggressive parts of the market took on a lot more pain than that. Where does it leave us in your mind? I mean, as I mentioned, 4 days, this market has barely even flinched at pretty much all the hurdles that were along the way. The moving averages, we got above last Thursday's high. We know it's kind of an upside bias the Wednesday before Thanksgiving and the Friday after. But beyond that, where do we go?
I think we're set up for a really strong rally into year end. And I know we just came out of a pretty terrible grind. I've talked to a lot of PMs that have said it's one of their worst 6-week periods ever in their career. So we know people lost money, they've de-risked. But we know into year end we have the positive seasonals, especially given how strong the May to October was. It's really a 5 to 6 chance that we're going to be up 5% into year end.
Right.
The second is monetary policy, I think, is going to shift dovish. Even if Fed Chair Powell is hawkish, we know it waiting in the wings is now a shadow Fed that's dovish. The third is we know sentiment is going to have to chase this rally because 80% of fund managers are trailing their benchmark. And then I think the fundamental story is pretty intact. As we're doing work into next year, and I think earnings visibility is going to be really good. So I don't think I'm questioning if earnings are peaking. It's more just that stocks price in and correct enough.
Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
Yes. I mean, we're almost through this year. And I'd say, looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever. And that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again. Yeah. But it's a replay of this year. And maybe we've now had three 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period.
Now, you mentioned obviously the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event. But it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch. And it led to what they call auto deleveraging.
You've definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Yeah. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite, because there's so much more leverage. And that got wiped out.
Right.
That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom. But now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading. Okay,
so so basically that has kind of sidelined the idea of what, Bitcoin 150, 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above to a new high. So Bitcoin makes its moves in 10 days and every year. I think some of those best days are still going to happen before year end.
We're watching it right now at 89.5, firming up throughout the day. Tom, stay with me. Let's bring in New Edge Wealth's Cameron Dawson and Obermeyer's Ali Flynn Phillips. Thanks to you both for joining us here today. Cameron, it's coming into this period, it would be common to hear the complaints, look, this market's too concentrated in AI, it's not a broad enough rally, and maybe we're complacent about the Fed. I mean, have we taken care of those things? Where does that leave us?
I think that Tom's stat about the underperformance of active managers is where a lot of this sits, because we can see that positioning is still underweight this market. Deutsche Bank updated their consolidated positioning. We're in the 34th percentile. That's underweight. And discretionary managers are in the 18th percentile. So there is still a large cohort of capital that has sat on the sidelines of what has been a very monster rally. So we think the best case for an end-of-year rally is that more people get dragged into this market. And I think the best fundamental support for that is that earnings estimates continue to be revised higher. So as long as earnings estimates are going up, GDP estimates are going up, it gives that cash on the sidelines a reason to chase into the market.
And has the character of the market, in your view, changed over the course of this moment? I mean, that sometimes does happen. The market doesn't usually pass the baton on a full run. Yeah. So where are we now?
We can look at non-profitable tech as a really great capture of this, is that it had a 65% rally through October 31st, and it's down about 14% in the month of November. It's bounced back a little bit, but that really captures this notion that beta has been the key leader of this market coming out of the April lows. So the big question is if beta, low profitability, low quality names can continue to lead. They certainly love having a Fed that looks to be easier and more dovish, so it really is dependent on what the Fed delivers. But to Tom's earlier point as well, we think as well that you're going to get Fed cuts in 2026 once you get the new Fed chair. So even if they come a little bit later or slower than what was initially expected, you're still getting cuts because you have a new person leading the Fed.
Got you. And Ali, over the course of this period, there's been a really dramatic switch in the AI narrative in terms of the perceived winners and losers. We're kind of re-ranking the ones that are best positioned. And I wonder what it means for the general segment of the market, considering that for a while there, it seemed as if the investors are going to be happy to see everybody invest to the max against this theme.
Yeah, well, first thing, I think we should talk a little bit about the current environment. And as Tom mentioned, it's been painful, but that's actually to us been really healthy and somewhat controlled. You've seen some nice rollover within the Mag 7 or the AI sector, and investors turning to sectors that people had left for dead. Just delving a little bit. So if you look at the past 6 months, only 18% of the S&P 500 constituents had outperformed the index. Over the past 5 weeks, that's actually doubled to 36. Not a huge number, but it really does remind us that the market's more than just a handful of companies. And you've also seen actually the S&P outperforming the NASDAQ. To answer your question in terms of within the AI sector, we think investors are really focusing on opportunity, but with execution risk, emphasizing that even profitable platforms can be poor investments if they overpay for that growth. So to us, leadership is more shifting towards business models that pair AI exposure with visible monetization, those strong balance sheets. And that to us is in terms of why Alphabet, for instance, is outperforming some of its more capital-intensive peers in the most recent days.
Sure. Now, the thought that it's a positive that so many stocks have been underperforming the S&P 500, because I guess as a stocks picker, you have a lot of hunting to do in terms of things that are down a lot. Do you think the market's going to start to reward a broader list of stocks? I guess is now the question. I mean, the equal weight S&P has obviously lagged badly, but it's closer to its high than the overall market cap weighted indexes are. In fact, it's within 1%.
Yeah, I mean, the reason why we should really reward a broader market, it's not just in terms of broadening, but really in terms of the healthy earnings picture. So, for instance, this most recent just third quarter earnings cycle, you actually saw earnings growth 13% year over year, which is the fourth positive consecutive quarter in terms of increase. But also, it was actually broadly distributed across different sectors. 10 of the 11 gig sectors, for instance, double-digit returns in things such as financials, materials. So we are seeing the broadening in the market because we're seeing a broadening of the earnings base.
Tom, you mentioned that it probably wouldn't be Bitcoin leading, but AI. I guess we got to be more specific in terms of AI, or do you think that the full leadership of the first half of this year, where the OpenAI, Orbit, and everything else can participate?
Yeah. Well, I know stocks have been sort of trading pole position, NVIDIA and Alphabet. But to me, the bigger story arc remains that AI is a mega trend. There's a lot of resources and spending, and it's a big contributor to growth. And we know there's a shortage of both power and silicon. So I do think it's going to ultimately move in the next 12 months kind of as one cohort. I don't think valuation sensitivity is as important as people think. We're actually studying this now. We're going to be publishing it soon. But if you look back 10 years ago, the most expensive stocks at the end of 2015 continue to be the best stocks over the next 5 years.
Right. Yeah. I mean, it's interesting because I don't even know if it's really a valuation story in terms of what's taken a step back. It's a matter of, kind of who's got the current lead.
Yeah, whose model
or the
works
clearest
better.
path or something like that. Yeah. Cameron, in terms of the macro, I mean, everyone has been able to say, okay, we had this rhetorical dovish pivot from Fed members. We can now price in a cut. You mentioned that it looks like we have a glide path toward 3% in short-term rates. Are those still going to be insurance cuts? Are those still going to be like the economy doesn't really need it, but we could use it because we just had the Beige Book come out, an hour or so ago, and there was a lot of commentary about softness in labor markets and companies finding ways to do more with fewer people.
Yeah, that is the biggest question, because cutting because you can is a very different story for risk assets than cutting because you should. If the context of the cuts is because the labor market needs the support, that the economy needs the support, what you would see within things like equities or credit is a lot of weakness because equity valuations would be too high and earnings estimates would be too high. But if you're cutting because you're just trying to get to neutral because you don't want to be too tight in the future, that's when equities can very much rally and enjoy it. Now, the Beige Book has been painting a very sour picture about the economy for quite some time, as has all soft data been painting a much more sour picture about the economy. So we continue to go back to this notion of what is the equity market telling us about things like the U.S. consumer. Equal weight discretionary versus staples is still in an uptrend. So to us, the equity market is still arguing that the aggregate consumer, consumer, of course, with big weights to high-income consumers, is still in a fairly good position. So we'll continue to monitor that for any kind of change.
Yeah, I mean, I do think that the outright inability of staples companies to actually perform is helping that. But you're right. In a real recessionary scenario, those stocks would probably start to work again. Ali, we mentioned, I guess, what's happening in terms of the Fed, which feeds into yields. The 10-year down below 10%. I was just looking earlier. The 60-40 portfolio total return has actually kept pace with the S&P on a year-to-date basis. Where are you thinking about those types of allocations, and what are you telling clients in terms of the fixed income side?
It's so nice to finally be rewarded with attractive yields on the fixed income side. To us, fixed income is one of those, it's the steadfast, it's the ballast, it's to protect against the unexpected. And so particularly if you're able to be high quality in terms of focusing on whether it's treasuries or corporates and stay kind of intermediate duration, that to us is more just nice to see cautious investors no longer punished.
Yeah, yes, for Tom, Cameron, and Ali. Thank you. All right.
Thank you, Carl and Sarah. Welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. Front and center at this hour, the fate of the rally and the final stretch of this year. Are we setting up for more gains to close out 2025? The Investment Committee standing by to debate that and much, much more. Joining for the hour, we got Joe Terranova, who's tickled by that, Liz Thomas, Jason Stipe, and Steve Weiss all here, right here at Post 9. Happy holidays to you guys, by the way. In November, we saw healthcare take leadership. We saw investors picking and choosing when it came to AI. We may be seeing Alphabet take some leadership. Is this a sign of what's to come for the rest of this year?
Well, so the rest of this year, what we're doing then is setting up for what we're looking at in 2026. And as we know, January is usually a pretty strong month for the markets. But what I've found interesting after this pretty strong breakdown in beta that happened over the last month or so is how the leadership has shaped up coming out of it. So when you look at last week's lows, Thursday we had that big turn from being up and then down. From last week's lows, the sectors that have been the strongest coming out of it, we've got healthcare, materials, and consumer discretionary. Tech is not on that list and one of the strongest coming out. So now I think investors are searching for, number one, as Joe mentioned, more attractive valuation. So you can think of that however you'd like to, whether that's value-based sectors or things like growth at a reasonable price. And then looking at more opportunities for beta opportunities going forward, what's going to produce some of that return. Healthcare has been such a bright spot, even since August, if you look at performance of healthcare since August. So I think that will continue for investors searching for ways to make money outside of a lot of the darlings.
Yeah, to your point, healthcare by far the best performing sector this quarter. For multiple months, it's been kind of moving higher. I want to talk about something else you're talking about here, the rotation out of tech. If you go look at what Bank of America put out last week, when it comes to tech, rolling 4-week average of tech outflows as a percent of market cap at 4-year extremes, going all the way back to 2021. Jason Stipe, with that in mind, last week at least, investors were getting out of tech. What are you expecting going forward, again, for today, holiday shortened week, but also for the month ahead, for December?
No, I think seasonals could be at play. I think, one of the things we haven't mentioned yet is obviously we heard some Fed speak this week from Daly and from Williams that were more dovish in tone, which I think has been accretive to the market and some of the movement. Also, the price action has been positive. We saw regionals move, transports move, home builders move. The Russell 2000 is up 5% in the last 5 trading days. So to Joe's point, I think breadth has been positive. And healthcare, healthcare being the leading sector this month, up over about 10%, which I think has been positive in terms of the cyclical rotation. So I think this is all generally good. I think we needed to take something off the boil as it related to tech. And, now we're getting a little bit of a bounce. And I think this is all healthy for the market going forward.
All healthy. By the way, Morgan Stanley out with a note, and Weiss, I want to bounce this off of you when we're talking about tech and some of that, the bond issuance and everything else. They went on to say, I'm just going to summarize, we're not going to show the whole thing. The primary risk of the AI capex boom is a failure to deliver productivity in a timely manner so that leverage rises faster than output. We were all here when some of these bonds were issued. We kind of talked about and debated it. Snipe, you were here too. Yep. I mean, really, is that the risk going forward, that we're going to see more of these bonds coming out, kind of shaking confidence in this trade?
No, I don't think so. First of all, I want to point out one anomaly today that has me greatly concerned. Joe's ties askew, his collar's unbuttoned. I don't think I've ever seen that before, and I find it very
Something's
disturbing.
going on. I will fix it.
No, look, that's just the latest one trying to come in and say, in a very guarded way, sitting squarely with their butt in the middle of the fence, is there a hole in the AI trade? Now, we're not, you've got to be have your head in a hole if you're not seeing productivity gains already from AI, and we hear about it every day. Then in terms of the balance sheets, tech, if I had to pick a sector where I didn't mind leverage, that would be in technology because of their cash flows, their free cash flow generation, et cetera. We never talk about it with airlines. We don't talk about it with capital-intensive businesses. Granted, they're at much lower multiples, but the risk is much higher there because of the various volatility in their businesses. I'm just not worried about it with tech. And I applaud the use of leverage because leverage leverages your returns. So that dialogue's got to go away. Now, some companies, like a CoreWeave or maybe an Oracle, because they've taken to such a degree, maybe that's a different issue. It is a different issue, but it's not an issue with any of the other tech trades. So I wish that would just die a quick death. So I think that the market's going to revert to where it has been. We're having the same conversation that we had in April. Is this it? Is it over? The answer is it's not over. Valuations now more reasonable, but I expect them to once again lead next year.
All right. Joe, last week we were talking about this, kind of the correlation between equities and Bitcoin. Yes. Apollo's Torsten Slok out with a note today, some other people out with a note, looking at the divergence. NASDAQ and Bitcoin usually highly correlated. There's been a divergence, kind of Bitcoin moving lower, the NASDAQ able to move higher. What does that say about this final month of the year or investor sentiment? Has some of that margin buying been washed out? Is that what we're seeing here when we see the NASDAQ able to move higher even with Bitcoin moving lower? Is there something else taking place?
I think it's indicative of that there were technical forces at play, whether that was reducing leverage and obviously seeking liquidity in the marketplace as it related to cryptocurrencies. It wasn't really about fundamentals. So all you really needed was more stabilization than a reversal and a move back higher in cryptocurrencies for equities to kind of say, okay, we can now continue the prevailing overall bullish trend. And I think that's what's happening. It's interesting because in the technology trade, and I think Steve makes some really excellent points, just because Oracle has a debt to equity ratio of 550%, that does not mean you overall assign this universal negative viewpoint on the usage of debt by others in the AI trade, because their debt to equity ratios are much lower. So, if Amazon's going to go out and do a $27 billion private deal, if Alphabet's going to do $25 billion, if Amazon's going to do it, that's fine. You can be comfortable with that because you're talking about reasonable debt to equity ratios.
Weiss, I want to come over to you along with Joe and Jason. You own Alphabet and NVIDIA. Does there have to be a winner? Does one have to be in the lead? Does one have to be your favorite? Can you invest in both? Can you like both? Do you have to change anything if Alphabet is becoming a rising competitor?
Look, if you have a one-stock portfolio, then pick them. But nobody's got that, right? So, sure, of course you can own multiple companies. But the one that's going to benefit.
But I'm saying favor one. Can you hold both equally? Or if one's taking leadership, do you need to lean that way and put your money in that one?
I don't even know how to answer that. I like Alphabet better. It's a bigger position for me than NVIDIA because I just like the other businesses as well. So some of the parts. And I also like the fact, I don't like the fact that I've been saying it for years. It's not happened. I haven't predicted it for years, but eventually there will be competition for NVIDIA. Their margins are much too big. And what you're talking about is design. Now, the company that wins through all of these is Taiwan Semi, because they're making the chips for Google. They're making the chips from NVIDIA. They're making chips for Broadcom. And guess what? I've got a company that's selling at about 19, 20 times earnings. I've got it selling at about 13 times EBITDA, versus if you look at Broadcom, that's ridiculous multiples. Those multiples are what the multiples are for Taiwan Semi. So to me, that's a perennial winner. It's got the least volatility in their earnings. Their capacity is sold out for years and years. So I don't know why that doesn't get a much higher multiple. Of course, there should be a discount because China wants to take over Taiwan, but realistically, I don't see that happening. So that's the one that's my biggest position out of all the semis and will continue to be for those reasons. Okay. Their margins also, for manufacturers, their EBITDA margins are in the 40s. When have you ever heard that for a capital, company that's basically, lots of capital expenditures because they pass the costs on?
I guess I'm asking the desk collectively this question, you as well, Frank, but what's remarkable to me is quarter to date, Apple is behind Alphabet in terms of performance, very quietly. Apple trades to a new all-time high, and I talked about that I had bought it personally in August and sold out of it recently because I don't want it in both places. We have it in the ETF. But think about the resiliency of Apple, and they haven't even delivered on Apple Intelligence yet. What is that speaking towards? What is that the message? Is 2026, is Apple going to be the name that maybe has the type of price performance that Alphabet had here in 25, where you had the skepticism coming into the year on Alphabet as it related to the regulatory challenges and search because of OpenAI? Well, there's skepticism going into 26 with Apple. That hasn't changed. Because just because the stock is at an all-time high, you're skeptical on Apple Intelligence.
Well, it's funny when you said it was quiet. It hit an all-time high yesterday, but I know what you're saying. We're not talking as much about it.
Apple is as close as you can get to a technology version of utility. Their growth in revenues has been kind of punk for the last 5 years. The growth in earnings kind of punk. It's steady growing, good balance sheet. It's like utility. So you're paying for the brand pure and simple, and you're paying for it being components in the indices, which helps lift it up.
Do you think they'll ever deliver on Apple Intelligence?
I think at some point they will, but they lag. Their technology is pretty much lagged all the time. But they've got such an installed base, and nobody's in the U.S. That is. I mean, let's
it's also growing in China.
But that's where the real upside is.
In China, their sales are rising, so it's the biggest installed base here.
But they were also hit pretty hard, and I wouldn't count on Apple, particularly as they move their supply chain out of China, continuing to grow their sales. At some point, I think that you're going to see, as we have in the past, muted sales growth and maybe even declining sales growth.
Joe, to your point, and kind of, sorry to cut you off, Jason, to play off Weiss's point, talking about Alphabet's other businesses, Morgan Stanley out with a note saying if the company can sell about 500,000 chips, it changes their estimates when it comes to the cloud business. It could change some of the moves when it comes to hyperscalers or who's in what position. Of course, Amazon's on top, Microsoft's second, and Alphabet's kind of like a distant third. But if they can sell those chips, Liz, and they can grow that hyperscaler business and then get more of those AI workloads on there, doesn't that change other parts of this whole narrative about who's buying with who and who's doing what with who? And doesn't that kind of shake up how people are managing their money?
Well, I mean, if it does change the narrative, honestly, I think it makes it a little bit stronger, because then you don't have everybody relying on one or two companies to keep all of the circular funding alive. And just to go backwards to this Apple conversation for a second, don't we think that some of the price action has been maybe in anticipation of them announcing some sort of deal at some point, right? And they were the one that had been left behind because they were late in some of this game. But perhaps some of the optimism is that, well, they're not going to stay out of the game forever. So eventually they figure it out somehow. I don't know. I'm speculating, but I think that some of the positivity has been just that there's been a rotation broadly in the market looking for other places to find upside, and people are looking at the places that have been left behind. But back to your original question, I think that if some of this competition does spread the love, so to speak, right, in all the spending, I think it makes the foundation stronger for the AI trade going forward.
Back to that bifurcation chart, if we can show that one more time. It's amazing some of the companies we see in red, like an NVIDIA down 10% this month after great earnings. I mean, Joe, when have you seen a company punished after outstanding earnings, outstanding guidance, like we've seen NVIDIA, down almost 11%.
That's the trend in this quarter. and that's where the market, I think, that was the signal to the market that battleship of momentum, which began with the macro assets, gold and Bitcoin, and the dollar reversing its downtrend in September, then it lent itself to the equities asset class. And Palantir was the signature for that. The Palantir report obviously was very strong, was consistent in what we've seen over the last several quarters, but it was a classic example of really good news and really bad price action. And I think that was right at that moment, the message to the market, okay, it's time to maybe work off some of the leverage. It's time to kind of take some liquidity out of the marketplace. And I think that's the exercise that the month of November has been all about. And I think it's represented. That's exactly what happened in the case of NVIDIA. And we've seen that in some other names, like some of the semi-equipment names, like Lam Research and KLA Corp.
Yeah, let's brought this conversation on a bit. By the way, JP Morgan maintaining Amazon as the top pick. Jason, you own this one. They say you want to buy the post-Q3 pullback. Agree with that take? Is this a good buying position when we're talking about Amazon?
Yeah, so obviously Amazon has been the underperformer, one of the underperformers in the Mag 7, right? So for me, as I look to this past quarter where we saw a re-acceleration of growth for AWS, it was 20% growth. Last quarter, it was roughly around 17. They've maintained margins on the retail business. I think this Trainium chip story, this next iteration story, I think is going to be the thing that we need to focus on. From a proprietary perspective, not being as reliant on NVIDIA as some of the other players. I think that's going to be important. And then I like this Project Rainier project that I think is going to be accretive for the stock in the long term in terms of supercompute. So I think they have a lot of leverage to pull, and I think this is an attractive place too, as well, for Amazon as a new shareholder potentially.
I mean, a lot of leverage. They have an ad business as well.
Yep.
Weiss, you also own Amazon. Is this a place you want to buy in? I know you said you're not running a one-stock portfolio. If you're running a three-stock portfolio, you want to add this one?
It's not one of my top 3 holdings. It's a large holding, but it's not one of my top 3. I like Amazon. Look, it's a good story. It's steady. I think Jassy, it was the right time for the transition. Bezos did an unbelievable job, incredible job, but it was time for Jassy to come in and put in some cost controls and a little better process in terms of spending. So we're there. To me, it's on a glide path as a permanent compounder, and I think it's going to do well. And all the cloud companies are going to do very well because just the massive trove of data the cloud has to accommodate. Now, that comes with spending, and we don't hear as much about Amazon spending, but Amazon's going to have to keep spending as well. So I like the stock quite a bit. It's just not a top 3 holding for me. Not far from it, just not a top 3.
So, Joe, we're looking ahead to 2026 right now. To the earnings growth, is that going to come from tech? Is that going to come from comm services? Is that where you need to put the money as we go into not only the last month of the year, but go into the new year?
So obviously the last several quarters, the overwhelming majority of earnings growth has been attributable to artificial intelligence and therefore communication service and technology names. But I also think you've seen strong earnings growth in other sectors as well. And as you turn the calendar into 2026, into a year which I believe is going to have elevated volatility and is really going to be about idiosyncratic stories. And it probably means when I say elevated volatility, I think you have to understand your positioning might be a little bit different in 2026. You might not be able to extend some of the leverage very comfortably that you were able to do in 24 and 25 in anticipation of what? The beginning of an easier Federal Reserve monetary policy cycle. I think at 2026 that probably sunsets at some point, even though we have further rate cuts in front of us. But I think you're seeing an awakening for the quality factor where momentum absolutely dominated it in 2025. I think over the last several weeks, the market's saying, yes, we want the quality of healthcare. And I think it's reflected in what we're just seeing today. Look at the list of 52-week highs. We've spent the majority of the show talking about technology, rightfully so, but there are other names today making 52-week highs in the financial sector, regional banks, Cincinnati Financial. GM, General Motors, is making a 52-week high as we speak. Las Vegas Sands, Medtronic, Monster, TJX, Prologis, Rollins in the industrial space. So there's other places you could go, other opportunities. I think that's an important theme in 2026. It's going to get harder in 26. I can't see how it can't. That doesn't mean it's a lower market. It's just going to get tougher.
I think you make an excellent point about how the dynamics are going to change in 26, so I just want to spend a minute on this. We've had a couple rate cuts by the Fed, looking now again like we're going to have one in December. In 2026, the thesis seems to be that we're going to have some sort of cyclical reacceleration. Productivity is going to come into play in a big way. GDP growth is going to stay healthy. The labor market might stay stable. If there is a reacceleration, to Joe's point, the rate cuts will stop at some point because they would just have to. And we've seen this movie before. So if there's a reacceleration, maybe it's driven by technology and the optimism and the spending around technology. But at some point, inflation starts to either come back a little bit or at least plateau, and the Fed has to stop, right? In that reacceleration, the sectors that tend to do well are not typically the high flyers and the growth sectors. You have to start thinking about some of the more value-centric names and the sectors that would benefit from cyclicality. So I think financials is still on that list, healthcare obviously on that list. You have to think about maybe even materials in some ways. And then add to that 2026 is a midterm election year, usually pretty tough for the market. So if we're looking at places to hide from volatility, again, things like maybe even consumer staples stimulus coming into play, healthcare again coming into play. So I think there will be a much different leadership picture in 26, and the market will start to set up for that at the end of 25.
That's a great point, because if 9 months from now we're talking about we need another rate cut, then you're not going to get the double-digit earnings growth that's expected right now for 26. That means there's a bigger problem in the economy, for sure, and that's going to affect earnings.
You know, Liz, to your point, by the way, Bank of America out with its 2026 outlook, 7,100 S&P price target, just about a 4% higher move from where we are right now. Overweight staples. So a lot of people seeing it the way you're seeing it. All right, coming up here on Halftime, retail's big moment as we kick off the holiday rush. How the committee is playing that sector. Much more Halftime coming up in 2 minutes. And welcome back to Halftime. After a volatile retail earnings week, the group now heads into its next big test, where the demand holds up beyond Black Friday. Courtney Reagan joins us now with much more on what to expect. Hey, Court.
Hi, Frank. So the next 5 days are the most important stretch of the year for retail. Adobe says 17% of total online holiday spending will happen during Cyber Week. But physical stores remain a big part of the equation, too. The National Retail Federation predicts 186.9 million Americans will shop in some form between Thanksgiving and Cyber Monday. That's more than ever before by their estimation. Now, shoppers tell Deloitte they'll spend about 60% of their budget online and 40% in stores over these next 5 days. Most retailers are not opening stores on Thanksgiving Day, but will offer doorbusters online. So Adobe expects online sales to grow 5% on Thursday. And even with the rise in online shopping, Black Friday still matters. It's forecast to be the biggest in-store shopping day of the year, according to traffic counting firms Insermatic and Retail Next, even if it's not as big as it once was. Adobe forecasts U.S. e-commerce sales will grow 8.3% on Black Friday from last Black Friday. And while Salesforce says Black Friday surpassed Cyber Monday in sales last year, and will again this year. So some debate, but it's still big. Retailers save deals for Cyber Monday, and consumers know it. Possibly the best discounts of the year for electronics, apparel, and computers, with total online sales expected to grow 6.3% on Cyber Monday. Now, consumers may feel less confident this holiday season based on economic surveys and what we've heard from consumer confidence, but they're still buying. According to many retail CEOs over the last 10 days, even if doing so choicefully, which is a word they're all using, particularly, the executives say, when there's perceived value. And in value, that's more than just price. For instance, Dick's Sporting Goods Executive Chairman Ed Stack says, when I'm talking about value, I'm talking about an item that also perhaps helps my performance if I'm an athlete. Frank?
All right, Courtney Reagan live from the NASDAQ. Courtney, thank you very much. Got quite a bit of retail ownership here, but Liz, I wanted to start with you. The consumer, we had a lot of questions about the consumer going into the holiday season. Bank of America out with a note saying last week we saw holiday spending up 4.5% year over year. Seems like a kind of bullish sign going into the holiday season.
Yeah, I mean, and Courtney's data shows us more bullish reasons to be excited about it. So I mentioned this at the top of the show that consumer discretionary has been one of the strongest sectors actually out of this volatility that we've just seen. And I think that that's a good sign. A lot of times you look at discretionary versus staples as a signal of cyclicality. We'll see what this holiday season holds. I imagine that there's going to be a lot of news about discounting and incentives and all of that. But into 26, again, expecting some stimulus, right? Expecting some tax refunds that are going up. I think the consumer has a chance here, and they're going to have to fight for it because we're still up against some inflationary pressures. But I think the consumer has a chance. So I wouldn't count it out. And discretionary and staples have been really poor performers year to date, relatively speaking. So if that cyclical recovery and reacceleration does start to take shape in 26, I think discretionary might be a nice place to be.
I think it depends where you are. So we're talking to a number of freight companies, number of 4PLs, 3PLs, et cetera, that handle it. And I'm hearing consistently that volumes are down 10 to 20%. Which means the order books for retailers are down 10 to 20%. And I think you've got a bifurcated economy, which is that people that are under pressure from inflation, from housing costs, from price of food, vegetables, which the White House has now identified, that doesn't leave a lot for discretionary spending. So you take that, and I think that's about half to 2/3 of the economy. So if you take the upper end, that's probably where you want to be because they're not as pushing back. But Frank, one other important thing. I'm getting so many texts about my jacket. Some love it, some hate it. So I'd like to ask all the viewers to email Frank Holland directly. You can find his email address and just vote whether you like it or not. Thanks, Frank.
I think
please
more,
let me know the reasons.
more importantly.
Wow. Did you see that comment?
Those results.
I didn't see that comment.
I did. More importantly, I fixed my tie.
You did fix your
because of
tie.
Steve.
Thank you.
Of the 11 S&P sectors, when I study how momentum in each of the sectors is working as a factor, consumer discretionary is actually the one sector where we have a very low success rate. It seems as though over the last 5 years, it's been a series of fits and starts. It looks like the momentum is beginning, and then the momentum trails off,
It's
and
a
you end up
business.
and you find yourself in a different place. Let's take Amazon and put it off to the side. Let's take Tesla and put it off to the side. I'm talking about the airlines. I'm talking about a lot of the apparel names that you've mentioned previously. The only places right now that it seems to be working is in off-price. So TJX, really good. Ross Star, really good. But then you hear from Burlington the other day, and we own Burlington, and it was awful. They're talking about warm weather impacting traffic. So it's, the warm weather is okay for TJX and Burlington, not okay. Rather, it's good for TJX and for Ross Star, not for Burlington. So it's very, very idiosyncratic. It's very difficult to kind of establish any degree of strong momentum. We've got it right now in eBay. You have it in Las Vegas Sands. It fell apart in Ulta. It fell apart in Williams-Sonoma. Garmin was a name I talked about frequently. DoorDash was a name I talked about frequently. And the momentum is reversed there. Very, very difficult to play momentum in consumer discretionary.
We got to go, but really quickly to your point and Weiss's point, not about his jacket. Did you realize that TJX has 4 times the market cap of Target? Just kind of speaking of that shift. It's kind of a big shift in the market when it comes to retail. Back on the halftime report, let's get to some committee stocks on the move today. We're going to start with Autodesk, popping on stronger than expected earnings. That name's in the JOTI ETF. Also an upgrade from Deutsche. Price target raised to 375, up from 345. Joe.
So 50% of their revenue is derived from architecture, construction, engineering, and that is related to the infrastructure build out for data centers and artificial intelligence. The revenue growth was remarkably strong there, up 23%, and that is indicative of what Liz mentioned before, where the thematic investment of artificial intelligence is going beyond what we knew, the narrow list of NVIDIA and other names in technology. It's expanding, and I think that expands further in 26, and this represents it.
All right, I got one more of your names. It's Workday, slipping on earnings. It was really about margin guidance that seemed to weigh on this name.
Yeah, the guidance wasn't good here. Look, this stock is down 23% on a one-year basis. For us, that means it has lost any positive momentum. Obviously, I can't tell you what we're going to do, but there'll be a rebalance, and we'll adjust it accordingly. But there was cautious guidance, whatever you cite as the reason, whether it's federal funding or the professional revenue services beginning to contract significantly. Looking into 26, there's not excitement about the ability of this company to be able to grow.
All right, we've got one more. United Rentals. Got to do this one quickly. Maintained a buy of B of A. Part of the story, believe it or not, this is not funny. Portable toilet peers distressed, and they're bullish on United Rentals because of that. The other company's called USS.
And I think this is a little bit of a muted response. The stock had made its high back on October 16th. It's pulled back since. It's at 814. Need a point of reference. You have the 200-day moving average sitting down at around 783 below.
All right, United Rental shares up just about 0.5%. And welcome back to halftime. Ahead of Thanksgiving, it's time to go around the desk and say which stocks everybody's the most thankful for. We took a look at the committee's best performing stocks so far this year. Jason, we're going to start with you. Pretty good list. Alphabet, Goldman Sachs, and Uber.
Yeah, listen, we've talked a lot about Alphabet. I mean, obviously up 70% year to date. So well vertically integrated, whether it's YouTube, search, and the ad business has obviously done really well. And it's great to see Sergey back. Kind of that founders-led energy, which I think is going to push the stock. Goldman Sachs is another one, up 42% this year. Revenue was up 18% in the last quarter. IB was up 42%. Advisory up 60%. I think with directionally what's going on with the Fed and rates being lowered, I think GS can continue to do well. Last one here is Uber for me. Mobility. delivery, both up 20%. I think the discretionary, as Liz mentioned earlier, sector can continue to move. Somewhat of a bifurcated consumer, absolutely, but I think Uber is one to play here.
Liz, you're thankful for some ETFs. GLD, obviously the gold ETF, the FXI, Chinese Internet ETF, and then you've been talking a lot about healthcare. The XLV healthcare ETF up about 15% year to date.
Yeah, healthcare was one of my calls for 2025, and I looked wrong until about early August. It's all been back-end loaded, but I will take it. Healthcare has clawed its way to the top half of sectors in the S&P, and I still think it's a great opportunity into 2026. So I am very thankful for XLV. And then the Chinese ETF, FXI, it's actually a large cap China ETF, which was a pretty controversial call earlier this year, but it's worked out well, up almost 30% year to date. And then GLD is a story we all know very, very well.
All right, Weiss, your top three. You got GE Vernova. You bought this one in October. Alphabet full year, and then Caterpillar. You bought that at about the halfway mark this year.
Yeah, let me set the record straight. I'm not thankful for GE Vernova. I'm actually down on it. I could care less about how much money people have made that owned it before me. But I'll fill in that blank. FTAI, I am. That stock's been a great stock. I think it's going to keep going. And look, the core portfolio that I have, it's the Amazon, it's the Meta, even though it's down, it's had great performance. And it's Vertiv. Vertiv's done quite well.
All right, Joe, you got the last word on this one. Micron's one of yours. This is when you added in the rebalance. I'm looking right here. It's up over 170% since you added it in the rebalance.
So therefore, it's guilty until it proves itself innocent. A recent addition has to prove itself out. Why? Because we could be late, just like we were on crypto. I feel better about the others. Newmont Mining, long the GLD. I think there's further upside in gold. And McKesson, I've owned that since March. I like healthcare going into 26.
Yeah, I want to amend. It's up 173%. You added it in October, so you have some of those gains.
Absolutely
not the full
acknowledge
year.
we could be late like we were in crypto.
All right, thanks a lot, Joe. We are back on halftime with final trades. Weiss, kick us off.
FTAI, it's FTAI Aviation. Look, I think this is a perfect way to extend your portfolio beyond tech, and interest rates coming down drive more demand as a lender to aircraft companies.
Snipe.
I like Eaton here. It's down 12% this month. It's finding support at the 200-day. I'm long.
Liz.
I know we're supposed to talk about turkey this week, but I'm from Wisconsin, so I want to talk about cows, cash cows, companies with high free cash flow, and the biggest sector is healthcare.
Joe with the last word.
Is that your favorite ETF? Don't answer that. XBI. Keep talking about XBI. I have a position in it. I keep buying more as it moves higher and higher. It's going to 125.
Yeah, XBI is doing really well this month, I believe.
Doing really well, right?
So is also the IBV
100%.
with Jason Snipe owns. All right, that's going to do it for us here on halftime. Have a great holiday. I hope you enjoy yourself. The exchange starts right now.
Hello and welcome to Blue Cloud Trading. I'm George. It's Wednesday. It's November 26th. It's currently 5:57 p.m. The market is closed, and you can see basically the entire markets have rallied here. The Dow is up 0.67, NASDAQ up 0.82, S&P 500 up 0.69, and the Russell 2000 up 0.89%. We just saw Tom Lee on Closing Bell, and we saw some clips from the halftime report earlier today. Both of those shows from today. And what we're going to do in this video, folks, we're going to cover a number of stocks that they talked about on the show. So I'm just going to show you a quick list of what we're going to cover, and we're going to look at the technicals, all right? We're going to use the Ichimoku indicator to help assess, the strength of these individual stocks and ETFs that I'm going to run through. So we're going to look at the index ETFs like the SPY, the Qs, the Dow, the Russell, the Euro stocks, okay? We will take a look at approximately 19 stocks and ETFs that I basically previewed before doing this video here. I've already looked through them. I can tell you which stocks are the strongest. You'll see those three blue flags there at the top, and I'll go into why those out of the 19, there's just three that really hit that level where they get the blue flag, and then which is a positive. Then I'm going to go into the Mag 7, some of them, not all of them. So I'm not covering every single stock, but I'm going to cover a good portion of stocks here in ETFs. I'll run through the sectors quickly, as well as member requests. We've got 6 member requests here. Hope you all have a great Thanksgiving tomorrow, but in case I forget to tell you later. But yeah, let's first take a look at the markets. So like I said, they were all up, and here's the heat map that shows us the individual stocks within the S&P 500, okay? And you can see all the majority of the technology stocks, especially the semiconductors, did really well today. But a lot of the software companies like CRM, okay, Now and INTU, ticker symbol INTU, did not do so well. Google, Meta were both down slightly. I mean, Google was down 1.08, Meta was down 0.41, Tesla was up 1.71, Amazon down slightly 0.22, Apple down slightly, I'm sorry, up 0.21%. The consumer defensives did pretty well. Utilities were up quite a bit today. The financials did pretty well, except for Visa and MasterCard slightly down. Healthcare stocks were kind of mixed. You can see some of the stocks did okay, some of them not so good. And let's look at the sectors real quick. Oh, by the way, since it is, we'll take a look at the 1 week performance here. There's the 1 week performance. You can see how, again, it's mostly green, except for NVIDIA down 3.36% so far for the week. Oracle down 9.12%. AMD down 4.17%, and Uber down, looks like 4.32%. All right, and so let's look at the sectors very quickly here. Basic materials had a big day today. They were, as a sector, were up 2.4%. Okay, so that's, you can see that right there. Utilities were up 1.37%. Technology was up 1.26%. The only sector that was down today, and it was only down 0.3%, was communication services. And here's the 1 week performance. Communication services have been the strongest performer for the week, followed by basic materials, healthcare up 4.12%, consumer cyclical up 3.95%. You can see energy down 0.67%, but you can see today they were up 0.72%. So that's interesting. So let's take a look at we'll start off with the index ETFs, and then we'll go right through all of these. All right. Let's make that chart a little bigger. And let me get rid of these lines for a moment, just so I can quickly, briefly share with you what you're looking at. Here is the Ichimoku indicator. Now, we're looking at a weekly chart. This week, okay, has reestablished the trend. Do you see over here how price has gotten above that green line? That's the 9 period. It takes essentially takes the high, the low of the candle. It's the midpoint of the last 9 periods, and it plots it right there. And so we did last week, we got underneath. Okay, we got under it, we closed under it, we recaptured the uptrend here on the weekly chart. As you can see, we're also still, price is still also above the Kijinsen, the 26 period, which takes again the midpoint of the last 26 periods instead of 9. All right, that's how that's plotted. And then we've got the other line here called the Senku Span A, which you see projected into the future. That takes the midpoint of those two moving averages and then projects it out 26 periods. You've got the Senku Span B, which is essentially the midpoint of the last 52 periods of the candles, these weekly candles that you see here, and that projects 26 periods into the future. Okay, so that's what basically creates the Ichimoku cloud. And what we're looking, and then the final line is the Chiku span. That's today's closing price, projected 26 periods into the past. In this case, 26 weeks ago. As long as that white line is above the candle, 26 periods ago, as you see right there, that's very bullish. You can see here how we had a little bit of bearishness right there when the Chiku span got under the price, and you can see the decline that happened, right? Because again, it's projected 26 periods into the future. Into the past. Okay, so now we have all the elements here, and what we're essentially looking for is the green line to be above the red line. We want the candle here to be above all the moving averages, and that signifies a very strong uptrend. And we've essentially been in that since we broke through the cloud here back on May 2nd. Okay, the S&P 500 has done well. We had a little bit of a scare last week, and now things are starting to recover. So that's good. Now here's the daily chart. Okay, so you can see that was the decline that we had last week, the last few, that led to everything. But what happened was the cloud itself, the bottom part of the cloud, became a level of support, and I talked about that. We built the candle there was a spinning top, and then you can see for the last 4 days now, we have been moving up. The S&P 500 cloud itself, though, did turn bearish. So you've got the Senku Span A under the Senku Span B. It could be a short-lived situation where it crosses back above, and then we can continue with this uptrend in the SPY. Did we break through this level? No. Do you see how we are stuck right under that trend line right there? So let me just zoom in a little bit so you can see that better. we have not broken this trend line. So that's a little bit concerning, a little bit. And the Tenkan-sen on the daily chart is still under the Kijun-sen. So the 9 period is under the 26. That's the faster one. Under the slower, that's also not bullish. But we are looking these last 4 days, obviously, we're in a better place than we were obviously back here last week. So that's good. Now, let's throw some support and resistance levels, okay? And this here, the 652.84 level from these lows, you can see how it was respected and bounced right off that level, and that's what's led to this continued move up. We're also using the directional movement index, and if you see that the positive DI, the green line, is moving up, and the negative DI9 is moving down, okay, that's a bullish trend. The ADX also started to move. That's the white line that you see right there. The ADX9 is starting to move up. That means that the momentum is increasing to the upside. So that's a positive, guys. So I like what I'm seeing here with the S&P 500, and this is a representation of the, the largest companies, So when you see the SPY moving up, that's a bullish, that's going to create more bullish sentiment for the rest of the market mostly. So here's the QQQ. This too has, for the last 4 days, has done pretty well. Okay, breaking back above that trend, that resistance level of 613.18. This particular ETF, okay, is also under a trend line right there. Okay, so we'll see what happens here. But I'm liking what I'm seeing on the daily, and on the weekly chart, it also recovered back above the Tenkan-sen. So that's key. Here's the Dow Jones, also breaking back above the Tenkan-sen, the 9 period on the weekly chart, and here it is on the daily. But again, not all of the elements are bullish quite yet. You can see that the cloud itself turned bearish right there. The Tenkan-sen is still under the Kijun-sen, but it's starting to starting to show some strength. Russell 2000 on the daily chart, we still have that bearish cloud. Tenkan-sen is under Kijun-sen. We did break back above the cloud. That's a good sign. Have we taken out any of the highs? No, we're still under the 252.77 level. So it still needs to break through that level. I mean, we are approximately 2.2% away from that level of resistance. The VIX continues to drop. That's a good sign. That's the volatility and fear index, okay? As long as that continues dropping, the market moves up. And as I've said before, so you can see the last 4 candles here. 4 days, the VIX has been dropping. And that's a very positive sign. I like it. Down 7.38% today. FEZ is the Euro stocks. Now, this ETF, okay, is also showing strength. It broke above the moving averages. It was up 1.23%. It was actually up the most out of the other index. When you compare it to the other index ETFs, that's good. So it sort of needed that because it was showing a lot of weakness here when price got under the cloud. That happened on, let's see, when was that? That was on Thursday of last week. And then it recovered very quickly with that bullish harami pattern and continued to move up, and now it's still moving up. We'll see if it can break also back above 63.70. It will probably find some resistance right here at the high of 64.36. Let me just go ahead and throw that on there. That's probably the next level of resistance where you really should be concerned. But get rid of this. It's no longer the prior high anymore. So that's the highest level, 64.36, that it's where it might find resistance. And that's about 2.6% away. All right, let's keep going. And we're not going to spend too much time on all of these stocks. We don't really need to with Ichimoku. All right, let's start off with the strongest ones that I've flagged here with the blue little flag that you see here. Why are those flagged as looking more bullish than the rest of these stocks and ETFs? Because they meet all the criteria that are necessary from the Ichimoku indicator on not just one time frame, not just the daily, but also on the weekly. So now you have a little bit more confidence in the continued uptrend of these stocks and ETFs. Broadcom up 3.26%. Look at that nice big candle. It also broke through on the weekly chart. You can see that level right there. We'll have to wait, of course, until Friday. Remember, guys, obviously the market's closed tomorrow with Thanksgiving. Friday, it's going to be a half day. I think the market closes around 1 p.m. So I think we're most likely to, unless there's some, absolutely crazy event that leads to the markets, dropping significantly. On Friday, I think we're going to stay in this nice uptrend going into the weekend, which is great. So Broadcom looks good on the weekly chart. And let's look at the daily chart. Looks very good here on the daily. And by the way, it also broke through this level of resistance. That's what you want to see. Okay, you want to see price breaking through and clearing prior levels of where it could have stalled and pulled back. It did not do that today. It actually broke through it. And then again, we've got more confirmation down below here with the ADX moving up and the positive DI moving up and the negative DI moving down. The volume did dry up a little bit here. Not as much participation today, but it is right before the Thanksgiving, so there's a lot of people on vacation. There's not as much trading that's going to be taking place, obviously, this week. So let's look at GM. Here's another one, General Motors. So on the daily chart, up just 0.04%, but again, it meets all the criteria that we're looking for. We want price to be above those moving averages. Okay, the moving averages are in the correct order with the green line above the red line. The future cloud is bullish. Chico span is above the price, right? And if you look at the weekly chart, same situation here. So General Motors has been on a tear. It's been doing pretty well. This is an old level. Let me get rid of that one. We don't need that level right there. Okay. MU, Micron, is another one that I flagged positively. Why? Because in the weekly chart, it has pulled back, found support at the Tengen-sen this week. It actually opened up. So it gapped up on Monday. This was Friday's price right here. Gapped up on Monday morning. And what did it create? It's called a bullish harami pattern, this candle pattern. Now, if you want to learn about these types of patterns, let me show you something, guys. So I have a Twitter account, or x.com, and this is the handle. It's at Blue Cloud Trader. Okay, so look this up. Now, once you're on that page, if you scroll down, you can find a lot of my posts and everything. But yeah, if you want to see right next to the post, you'll see replies, and you click on highlights. All right, click on that, and then scroll down a little bit. And this is where you'll find the candle pattern reference sheet, which you can also, I believe, download from here. You can download that. So here it is, candle pattern reference sheet. It has all of the patterns. I would strongly recommend that you learn these. Very important. We just talked about the bullish harami. There it is right there. Okay. That's the bullish harami. Okay, so let's keep going. So that's the weekly chart. Here's the daily chart. Okay, 4 days in a row, got back above the Tengen-sen actually today. So that's a nice signal. I'm not crazy about this particular candle because it's a small little spinning top, right? It's not like super bullish, and it didn't happen with a lot of volume here with a breakout, but it was up 2.55%. Price did gap up literally right above that level, and it took out this resistance level. Okay, you can see how price got stuck at those moving averages back on Monday and Tuesday, and then today, boom, it's above it. All right, now the rest of these, we might find one of the time frames to look positive, but something is off technically, and so they don't get the blue flag basically. Autodesk, let's look at this one on the daily chart. Today was a big day for Autodesk. It actually gapped up, as you can see here, got up to this level. It opened at around $316, went all the way up to $320. That's what the wick at the top represents the high of the day. But this was the opening price because it's a red candle, body. Okay, so it opened at $316.49, and then as the day progressed, it continued to drop. The sellers took control, and they actually the price closed under the Ichimoku cloud and under the moving averages. That's not a good sign. So at first glance, you might say, you know what, Autodesk is great. It was up 2.36%. I think I might add this position. But if you look at what transpired throughout the day, it's not bullish at all. And it even threw off the directional movement index, which is why my number one indicator is the cloud itself, the Ichimoku indicator. So the cloud itself is still bearish. You've got Senkou span A under Senkou span A under Senkou span B. The Chico span here is still under price. Okay. And then that's, again, this is the daily chart that you're looking at. Okay. So, but let's look at this. Let me explain what happened today. I mean, this is the daily chart that you're looking at, but if we switch it over to a 5-minute, we can see the whole experience. If you happen to be a buyer of this stock when it opened at 3:16 in the morning, okay, you can see how price moved up. Now we're looking at a 5-minute chart, okay, and around this time here, it reached the opening. So that dotted green line is the opening price. You can see how price dropped immediately, or maybe it moved up and then closed at around 312 on the 5-minute or so, moved up back to the opening price where it found resistance right there, and dropped and stayed under the moving averages, stayed under the cloud. And so that's what I'm saying. It's not looking particularly great here, even though it was up 2.36%. So this is where technical analysis can give you a little bit more insight about what's transpiring, not just on a daily or weekly chart, but you can look throughout the day to see what happened and get a better, sort of understanding about whether you want to add a position or not into the stock. And you can find out why. Why did it initially gap up? You can look at the history. You can one of the things you can also do is, you know what? Hold on one second. You can, for example, use another platform like the FinViz Elite, for example, which is what I use here. And you can see there's even a little AI generated content, right? It says maybe incorrect, but November 25th, okay, 11:32 a.m. Reports of Meta's talks to buy Google's AI chips sparked AMD's intraday plunge. Okay, and let's see what else does it say here. So you can get more information about why this is happening, why this is taking place. Anyway, all right, let's get back, folks. Let's get back to what we were talking about. Let's go through the rest of these very quickly. ARK is under the cloud. What does that tell us? To stay out of the stock or ETF because it's in a decline. It's an established downtrend, not the time to be adding. You add when price is breaking through the cloud after a decline. That's in the initial stages where you want to get in early once price has broken above resistance levels, like that 54, 52 level right there. Okay, you can see how, perfect example, how resistance levels can now signify a breakout, which is what happened right there with that candle. It also broke above the Ichimoku cloud at that point. All right, and then you can see how it stayed in that, created a little bit of a, essentially a little consolidation box right there, broke back above that level, okay, and then just continued moving higher and higher and higher. Another consolidation box, continued up higher. Okay, another consolidation box, actually, and then what happened? Instead of breaking back above the box, it broke under the box. Hence the decline that you're seeing here. So now we're stepping our way downwards. And it's impossible to determine how much further this thing is going to go, which is precisely why you want to stay out of the stock, essentially, or ETF, whatever it is that you're trading. Okay. BURL, Burlington Stores, also broke. You can see here under the cloud this was on Tuesday, yesterday. We recovered a little bit today, up 4.41% bullish engulfing pattern, another pattern that's bullish. But as long as it's under the cloud, I'd just stay out of it. There are better opportunities out there. Why chase something that's not looking, in my opinion, perfect when you're initially looking to get into it, right? FXI. Also under the cloud on the daily chart, I'd stay out of that one. GE Vernova, under the cloud, no. Goldman Sachs. Now, this is a little different. There's a couple of things that are, still not perfect. You got the Senko Span A is under Senko Span B by a hair. The Tenkan-sen, the faster moving average, is still under the slower one. I don't know if you can see that. The green line is under the red line. But price did break above. And it's looking pretty bullish. I like what I'm seeing with the directional movement index. I think give it another day or two, and the thing is going to give us a buy signal on the daily chart. We do have the buy signal on the weekly, with price breaking back above the Tenkan-sen. So Goldman Sachs looking good, but it doesn't get the blue flag. KRE also on the weekly chart, you can see that the regional banking ETF popped back above the moving averages. That's a good sign right there for the weekly chart. And here's the daily. Wait, let me just see something. Yeah, so the future cloud is bullish. Daily chart is still not bullish. Senko Span A is under Senko Span B, but it did break above it. you don't have perfection here. So, it's really up to you to determine if you want to get into something like that. If you're using traditional technical analysis, you'd be looking at something like, this double bottom scenario right here where price stalled at these lows here and then bounced off it, breaking above this high, starting to show some strength at least. The Chico span broke above the candles as well. So that's positive. Okay, MTUM, momentum factor. It's under the cloud. I'd stay out of it. Okay. NEM, Newmont Corporation Golds. It was up 4.93%, but you can see here, Cinco Span A is under Cinco Span B. We've got a trend line that's still declining here. It's almost like a symmetrical triangle. I'd probably want to wait a little bit for a little more proof on this one, obviously, before considering it. PLTR, stalling at the cloud itself. That's Palantir Technologies. No on that one as well for the time being. RSP, still kind of stuck in this, like it's inside this consolidation box. I would hold off on this one as well, right? Bearish cloud. Taiwan Semiconductor, price is inside the cloud. Tenkan-sen is under Kijun-sen, also bearish right there still. Chico Span is under price. Bearish cloud, no. URI on the daily chart, under the cloud. No on that one too, even though it showed a little strength today. Workday Inc., which is WDAY is the ticker symbol. No on this one. Down 7.85%. Under the 200 declining day moving average. I don't like to buy stocks that are in a decline. And look how long it's been in a decline for, folks. It's not like it's just started or anything like that. We're talking about, you can go all the way back to maybe you could go back to December 10th of 2024, it's dropped 26.9%. And if you go back even further, back to February 27th, 2024, it's down 30.96% since then. XRT, I don't know if people were recommending this, but I'd stay out of that one, obviously. XRT is the retail ETF. Retail's showing a little strength this week and the prior week. You can see broke above the moving averages there that were under the cloud, but we're still we're technically stalling right at the cloud. So no on this one too, for the time being. That's the daily chart. Here's the weekly chart. The weekly looks much more bullish here. Okay. And that's it for those stocks, the 19 that we just went through. Let's take a look at some of the Mag 7s here, like Apple, which still looks pretty good. It gets a blue flag, but, it's been stalling at that 277.32 level. Think about that for a moment. Why is that? Here's the high that I'm talking about, the 277.32 from that candle from October 31st. We haven't been able to break above the October 31st highs. We're still stuck under them. Okay. Wait a second. Did we? We did just barely? Oh, yeah, we did. 277.55. All right, so the high there of that candle is 277.32, which is that level that you see there. Yeah, we closed at 277.55. Am I excited about this breakout though? It looks like it's under that level. It's just pennies that it's above, and we can see the wick at the top there. That represents selling that took place at the end of the day. Let's look at the 5-minute on Apple. There's that selling that took place, right? You can see how that's the 277.32. It's just barely above it, and it's under the cloud right now in the 5 minutes. So yeah, it's like it's technically above. But I would hold off on adding a position here until it clearly breaks through that 277.32 with a nice bullish candle. All right, here's and on the let me show you the weekly chart. The weekly chart is like I said, stalling around that area. Tesla stalling at the Tenkan-sen on the weekly chart, the 9 period, and on the daily it's inside the cloud, so no on that one. Meta is under the cloud still. It's been under the cloud for a while. A bearish day, down 0.41% for Meta. Microsoft up 1.78%, but stalling at that 9 period. Remember, whenever price comes to a level of resistance, right, when price is under moving averages, moving average, it will typically find resistance at that level. And it touched it and dropped. So no on that one. Amazon is above the cloud technically, but a lot of the things are not looking great here. You can see the cloud is bearish, the future cloud, the faster moving average is under the slower one, so I'd stay out of this one too. Okay, let's go to the next segment here, which is the sectors. And I'm going to just talk about, I'm not going to spend too much time on these, just kind of again, Tell you what the strongest ones are. The top 4 here. XBI Biotech is looking great, up 1.22% on the today. Look at that, beautiful, beautiful trend. That's the biotech ETF. Here's the weekly chart, still moving up. Okay, I like it. XLV is still looking good. It's coming up to a level of resistance of 159.64, that prior high that goes all the way back to 2024, September 6th of 2024. But if it can break through that level, healthcare should continue this nice trend that it's in. So we'll keep an eye on that. GLD, gold, reestablishes itself back above the Tenkan-sen with a nice bullish candle. On the weekly, here's the daily chart. Also yesterday, broke above the Tenkan-sen. And the good news is the green line there popped back above the red line. Hence, for the first day now, we got, for the last couple of days now, we've got gold back in our good graces. GLD looks bullish on both time frames, on both the daily chart and on the weekly. Okay, there's the weekly chart, like I said. And then silver did the same thing. It was up 3.71%, actually more than gold today. Now it's going to come close, super close to these highs. The high here from October 17th of 49.25, which is approximately 1.96% away. So if it can break through that level, I think we've got something here with silver as well. I think it's going to just take off. Remember, I talked about how like both silver and gold were kind of building like these almost like symmetrical patterns. Let me just show you the daily chart. If I just draw a trend line, like you could see how it actually, did it break through that trend line? Ooh, it did not. Ooh, that's interesting. So on the daily chart, guys, I hope you guys saw what I just did. I just essentially took the prior 2 highs, this high here and this high, and extended that through. And do you see where it stalled? Right there. So that's concerning. I wouldn't be jumping into silver, this ETF. There might be other options, like specific stocks, though, that I would be looking at. So, okay. GDXJ. Okay, the only reason it didn't get a blue flag, but overall it does look pretty good because it broke through this high here and got back above the cloud. But the future cloud is still bearish. That's all, basically. But it's looking good on the daily and on the weekly chart. Stalled around 105.24, but did surpass it by a few pennies. It's going to have some resistance also at this high right here, the 112.45, which is a weekly level. Okay, so watch that level right there. Now, Oil K, which is the ProShares K1 free crude oil strategy on the weekly chart, still in the downfall. Copper, COPX, look, this is the copper miners ETF, popped back above the Tenkan-sen on the weekly chart. On the daily chart, Tenkan-sen is still under Kijun-sen, but overall it looks pretty good. I like what I'm seeing here. I also see, I can kind of visually see that it's still stuck under that trend line though. All right. XLC, inside the cloud, I'd skip that one. IBIT, Bitcoin, 4 days in a row where it's been bouncing here a little bit at this low, from that low right there. But look where it stalled, right at the 9 period. And it's still under the cloud. So no on IBIT. SMH, it recovered back above the Kijun-sen, but we still, it took a big hit, the last few weeks here. It dropped quite a bit. I do like the fact that semiconductors, let me just see something there. Yeah, see how it's kind of still under that trend line. You got green line under the red line. No on SMH for now, basically. Real estate, XLRE, no, under the cloud, under the 200. XLY is inside the cloud, no on this one. That's consumer discretionary. Utilities is inside the cloud, no on that one. XLP is, you can see here, entering the cloud, but still bearish overall. XLK, also, that's technology. Yeah, we've had 4 days in a row, but it's still under the Kijun-sen here. Chico Spin is still under price. Bearish cloud for technology. It took a big hit these last few weeks. Industrials is inside the cloud, no. Financials inside the cloud, no on that one as well. Energy, XLE, is this particular ETF. It shows some strength, got back above the cloud here, but it's also still stalling around the moving averages. All right, but I like the fact that it has a bullish cloud here on the daily. And if you look at the weekly chart, it's still holding up pretty well, right? You can see that trend, those two trend lines. It's like a symmetrical triangle where price is kind of getting squeezed in here. We'll see what happens with energy. XHB, home builders. Let's see. Weekly chart. Looks pretty good this week. Okay. So you can see that the single span A got above the single span B. It's still above it. This is the first week where it broke above the cloud itself. The Tenkan-sen and Kijun-sen are around the same level in the weekly chart. Now on the daily chart, we're still under the cloud. So no, I would not be jumping into this. But I like the fact that it's starting to show strength on the weekly here. Okay, up 1.27. XLB, here's the weekly chart. Also breaking back above the moving averages, but the Tenkan-sen is still under Kijun-sen, so no on that one. And let's look at some of our members' requests. Let's start off with Ralph Lauren, which is one of the stocks that gets a blue flag because it does have on the weekly chart and the daily chart very bullish technicals, up 1.84%. In fact, this week was a very strong week for Ralph Lauren. Okay, I like it on the weekly. Let's look at the daily chart. Still looking very strong here, especially once it broke through these resistance levels. Okay, I like that one. It's getting a little bit extended above the moving averages here, but overall, I like the trend still. It's still very strong. Lyft. Okay, this one here is pulled back into the cloud. It's under the moving averages. At this point, it would be more of a hold scenario if you happen to have a position in this, but I wouldn't be adding any positions here, obviously. It's bearish on the daily. And on the weekly chart, it's still holding up above the Kijun-sen, so that's a good sign right there. PayPal on the weekly chart is still under the cloud. It's still under the declining 200-day moving average. This week showed a little bit of strength. We've got ourselves what's called a bullish harami pattern again, right? And so that it could turn into something, but I wouldn't be adding positions, obviously. Here's a daily chart. Again, just 4 days in a row. It did break and closed above the Tenkan-sen, but as you can see, we're still in bearish territory here. Uber, also under the cloud here, still showing a little bit of strength, but it's still under the 200. It's probably going to stall right around there, about another 1.6% away on the daily chart. Here's the weekly chart. Okay, a bullish harami on the weekly, up 2.35%. Not the time to be adding, though. I would not be adding positions. It's more about managing your stocks when you're in a decline. You want to look for reasons to hold a position versus closing out of the position. And if you see, something like this gives you some, hope that the thing is going to turn around. Okay, you can see that the Chikou span turned up right there, right? We get a bullish harami pattern. The cloud is still bullish here on the weekly chart, but I would not be adding positions here. WPM on the weekly chart looks great. We've got a bullish cloud here. Price got back above, right? This is in the gold, in the basic materials sector, gold. Broke back above the Tenkan-sen. Okay, so that's good. We'll see what it looks like on Friday because this candle is still forming. Remember, whenever we're looking at a weekly chart, folks, we still need to wait until Friday to get to know exactly where this is going to be. Okay, this is not the closing price yet, but on the daily chart, we did close today above the cloud, but the future cloud is bearish. Okay, so that's the reason it does not get a blue flag here. All right, and then Zoom Communications. Let's start off with a weekly chart. All right, so it had a big day today. It actually moved up quite a bit. What's interesting about this is it gapped up. Okay, it gapped up from yesterday. I'm sorry, from last week. It gapped up on Monday and continued moving up. It reached a high of 91.04, but then it spent the rest of the week. Actually, this happened yesterday. Sorry, you can see here on Tuesday, right? So here we were on Monday. On Tuesday, it gaps up. It reaches that high. and then spends the rest of the day on Tuesday and Wednesday dropping. Here's a 5-minute. So there's Zoom. There we are on the 25th, moving up, and then once it got under the Tenkan and Kijun, right there, it dropped about 5.55%, and it's still under the cloud in the 5-minute. These are little 5-minute candles that you see right here. So you can see how this indicator can be very useful, even if you're a day trader. Obviously, you can day trade using shorter time frames. You can look at this on a 1-minute time frame. It's going to be a lot more erratic. Here's a 3-minute. So each one of these little candles represents 3 minutes, and you can see how it is moving, dropping in price. So Zoom is not a stock that, on the daily chart, it did stall right at the moving averages. Okay, let me look at the weekly chart again. Technically speaking, everything on the weekly chart here looks good on the weekly because we did close technically above. We did close technically above the Tenkan Kijun, and we do have a future bullish cloud here on the weekly. So the weekly passes the test, but the daily chart does not pass the test yet. The moving averages are not in the right order here. They're at the exact same level, it looks like, at 84.23. Okay, so that's the only thing that's missing here for and the Senko Span A needs to cross back above the cloud. I'm sorry, above the Senko Span B. I also don't like the what happened, like I said, on the 5-minute chart. You don't want to be adding positions on a negative candle like this. You want to see some strength going into next week, basically. And that's going to do it. If you guys like this charting platform that I'm using here, it's called TC2000. And you can get an affiliate coupon, folks, $25 off. And here's some other information that you might be interested in learning about. So if you go to my page here, Blue Cloud Trading, you click on this. Right next to the join button here, you click on 9 more links. It will bring you to this link right here. This is where you get the $25 coupon for TC2000. Okay, you click on, there's a whole array of, links here that you can take a look at, including my Twitter page here. And this right here is the TC2000 chart layout. If you want your layout to look like mine, after you've, subscribed and became, you get the trying out the software, you can actually use this link, this here. This is the automatic layout so that it looks like my chart, essentially. But let's say you click on that, and what you want to do here is add your email address. And as you can see here, click on the little button here. Yes, I would like to receive email relating to the TC2000 products. You will receive a $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading, as long as you haven't used the service in the last 12 months. That's the key thing. This is the pricing area, software plans and data. Okay, and if you do monthly, the monthly right here, these are the prices. So you can do the basic for free for 1 month. And here's something else that I learned just recently also is if you use their brokerage service as well, you get automatically every single month you get a $25 coupon towards your charting platform. So you can essentially have the basic for free, basically, for as long as you have a brokerage account. There are some stipulations there, like I think that you have to have a certain dollar amount in the brokerage account, or you have to make at least one trade through the brokerage. And why? So you can find out about that. I'll get more information about that to you guys in the future. But so yeah. It says here I have multiple coupons here. Let's see what else. Oh yeah, one other thing I want to talk about very quickly is the member-only videos that I produce every weekend. I go over my entire portfolio, okay? And to access these videos, you do need to become a member. How do you become a member? You click on the join button, which is right next to the subscribe button. It's free to subscribe. Hit the notification bell. That's all free. Help me reach 26,000 subscribers, guys. I really want to hit that next milestone there. And then if you do want to access these videos, you click on the join button. And then you want to select there's 3 tiers here. Okay. You've got Blue Cloud Supporter. Under Blue Cloud Supporter, you can request a stock or ETF be analyzed, like the ones I just did. One stock or ETF per month. Blue Cloud Trader, you can request 2 stocks or ETFs be analyzed per month. Now this is where you get access. Under Blue Cloud Trader, you get access to those exclusive member-only videos. So once you become a member, you'll be able to open those up and view them. And they're usually about an hour long or more, What's the next level? Blue Cloud Legend. Under this level, you get to request up to 3 stocks or ETFs analyzed each month. There are some recorded day trading videos. For those of you who are into day trading, you can learn a little bit about how some of the trades that I did using the Ichimoku indicator. Daily trade updates posted. Now this is the key thing here. Every single day, Monday through Friday, before the market closes, I post. You see posts here, right? But once you've joined, there'll be a new tab that opens up. Let me show you what that looks like. It says membership. Once you click on that, you'll be able to access those daily posts where I share my daily trades. What stocks did I add that day? What stocks did I close out of? I also include basically a screenshot of the stocks that popped up on my proprietary Blue Cloud scanner. So that's, a lot more there. Anyway, guys, thanks for watching. I appreciate all of you. Hope you all have a great Thanksgiving, and I'll catch you all in the next video.